Hi, everyone, and welcome to the May 2023 market update. My name is Cameron, and welcome to Discover AZ Lifestyles. This is our YouTube channel where you can stay up to date on everything regarding the real estate market here in Arizona, more locally here in the greater Phoenix area. We are going to walk through this video. If you like it, please do so. Thumbs up on the YouTube channel there. Subscribe to the channel, make sure those alerts are set up so that any new videos that we put into the YouTube channel, you're getting those, you're getting the alerts. We've got community reviews in there. We've got a whole lot of content that's about to kind of pop in there. So would love for you to stay updated on that. Okay, well, let's get into it. So May 2023. So we've made it through. We're almost halfway, getting pretty close to halfway through the year, and it's been an interesting one. We're going to cover some information. We're going to start out just to kind of see what the trends on pricing, what they've been doing recently. We are going to talk about inventory and foreclosures and kind of what that's going to roll into the impact of what a potential recession could do for the housing market, and where does that leave buyers and sellers on the decisions that they need to make, irregardless of what's going on in the economy. So let's roll into it. Great quote to start us off here from Doug Duncan. He's the Senior VP and Chief Economist over at Fannie Mae. On a quarterly basis, home prices rose a seasonably adjusted 1% in Q1 of 2023. The fact that prices rose slightly in the first quarter is evidence of significant pent-up mortgage demand despite ongoing affordability constraints. If you've been watching these updates, we've been doing them now for several months. And I think one of the things that you've noticed, and you've seen this infographic before, is that home prices are stabilizing. We certainly saw some craziness in the first part of last year. The beginning of the decline was in the summer, especially out here in Phoenix. We really started to notice this June, July, August, when things were starting to kind of go down on home values coming off the craziness of the pandemic run. And then we started to see that kind of slow down a little bit toward the end of the year and into this year. And as we can see, we're starting to kind of see that rebound come back up. Case-Shiller, FHFA, CoreLogic, a lot of these really reputable data sources for the industry are showing this is real data. This is not projections. So these are month-over-month changes in home value, and they are continuing to, go up is a relative term. I think what we can expect is stabilization. And we're going to see that, as a trend throughout the, the coming months. But just in retrospect, another great quote here. This is Andy Walden from Black Knight. Just 5 months ago, prices were declining on a seasonally adjusted month-over-month basis in 92% of all major U.S. markets. So just 5 months ago, we were seeing 92% of major U.S. markets declining in price. Fast forward to March of 2023, and the situation has done a literal 180. We are now seeing rising prices, home values, in 92% of markets from February going forward. Amazing shift, and it's not substantial. It's not this like major swing, but it is a clear indication that things are starting to see markets are starting to see an increase. Now, this is Fannie Mae's in their March report. They were forecasting over 4% decline in home values, and now in their April report, it's just over 1%. So again, the trend is going towards, up, but we're not necessarily seeing these major, month-over-month price value increases. And we'll get into some more data on that shortly. So let's talk a little bit about inventory and foreclosures. You've seen this graphic before if you've been following us. This is really just to kind of show some history and defining, what a buyer's and seller's market is. A seller's market is anything that's less than six months supply. If you're 6 to 7, you're in neutral. And if you're 7 and above months of supply, you're in a buyer's market. As you can see, for a very long time, the better part of a decade, we've been in a seller's market, albeit recently in a much more intense seller's market. and it did, start to come up, but it's really coming back down. And, I think it's just fun to kind of go back and look at some of these predictions. This was actually not too long ago by Atom, which is it was a April article that U.S. foreclosure activity continues to climb in Q1 2023. We've got some others here, Bloomberg, CBS News, MSNBC or MSN, Redfin even, foreclosures jump. And is that true? Yes, but here's the relativity. This is the history going all the way back to 2005 and seeing where we've been on foreclosures and kind of where we're at now. And we are, if you look at those last, few quarters here, this handful of quarters that started, you can see the drop off in Q2 of 2020, and foreclosures just basically went, more or less off the map. And they stayed that way because of the foreclosure moratorium. And what that did for, citizens and residents and homeowners was great, right? It gave people some breathing room if they lost their jobs because of COVID and such. It gave them an opportunity to recover. And then we did start to see when that moratorium got lifted, we saw a rise. And if you're looking at, Q1 year over year comparisons, yeah, it's a pretty substantial jump. But you can see the last several quarters now, it's been fairly modest, and we are nowhere near some of the worst that we've ever seen. In fact, we're lower even today than we were pre 2008 crash in the early 2000s, or going back to 2005. I think that Realtor.com, this gal, Claire Trapasso, there's no reason to panic, at least not yet. Foreclosure filings began ticking up in late 2021 after the federal foreclosure moratorium ended. The moratorium was enacted in the early days of COVID-19 when millions of Americans lost their jobs to prevent a tsunami of homeowners losing their properties. So I think that the foreclosure argument, we can kind of put that one at least to the side for now. I don't see how it really has an impact on the housing market or the economy. Now, if there's a recession, will there be more foreclosures? Probably, maybe, we'll see. But I don't think even nearly close. And I'm going to get into some reasons in a few slides on why I think that is, because I really, really feel like the foundation of our housing market right now has some really, really strong roots. It's a very stable housing market. But all of that to say, what happens if we do hit this ominous recession? Okay, well, let's define a recession first of all. The National Bureau of Economic Research defines a recession as a significant decline in economic activity spread across the economy lasting more than a few months. That definition changed recently, if you follow any of the politics. And it does, it's a mix of factors: GDP, unemployment, retail sales. There's a number of things that go into that to define a recession. But, let's even say that we do, this is true right here. This is the Fed talking in March, saying that given their assessment of the potential economic effects of the recent banking sector developments, the SAF's projection at the time of the March meeting included a mild recession starting later this year with a recovery over the subsequent 2 years. First off, mild recession. I think if we even get to that point, that's probably going to be accurate. 2 years, okay, that's also probably accurate, but a lot of that is subjective. And the big question is, let's just say all of this is true and it happens, how does this impact the housing market? And so let's go back and just kind of look at some real information, some data, some facts here. So this is Bankrate talking, during a traditional recession, the Fed will usually lower interest rates. This creates an incentive for people to spend money and stimulate the economy. It also typically leads to more affordable mortgage rates, which leads to more opportunity for home buyers. Looking at some of the pros and cons of buying a home during a recession, of course, on the pro side, you've got less competition. There's just less buyers out there, lower prices, lower interest rates. But on the negative side, you've got stricter lending requirements, fewer available options, fewer available homes for sale. Sellers decide to take their homes off the market to kind of deal with their personal situations, perhaps. And then just that economic uncertainty. So I think that if you, though, look at the history of what's happened in previous recessions, as I've shown this graphic before as well, but if you look at the last 6 recessions that we've had, you can see now 2008, that was a very unique situation. And candidly, that recession was in large part, the catalyst for that was the crash in the housing market, and really in the lending sector. And so that one was directly, correlated. The recession was directly correlated to housing. The others, not so much. You can see in actually 4 of the last 6 recessions, we've seen substantial increase, mind you, over 6% in 3 of them, 3.5 in the early 80s. And even if you look at that one in the early 90s at, just under 2% decline, okay, 2% in a recession, not bad, something that we can weather. We saw, if you go back, I don't have data on this, just a thought, but if you go back and look, I'm sure from middle of, over the last 12 months, basically, summer of 2022 through today, you can probably say that we've seen about, a 2% drop. So we're not even in a recession. That's just a normal market correction. So point being is that not only do home values not necessarily decrease or decline in a recession, in fact, they may go up. And I would even argue because of the inventory challenges that we have, they almost certainly will go up because interest rates will go down, as we can see in this graphic. So again, same last 6 recessions, and what has happened to the interest rate? You can see in the 80s, we saw 4 or 5%. Of course, 1-2% in more recent years, but 1-2% from where we're at right now. Can you imagine the buyer demand and the urgency for people once they see those interest rates tick down below 6%, and maybe they get down into the low 5%, and they, people are now all of a sudden able to afford more home than they were, just 6 months prior. And it creates a run on real estate again. So if you want to be part of that market again, great. Let's hang out and wait and see what happens. I hear that quite a bit from clients and customers, and there's nothing wrong with that because everybody's got their own personal situations and circumstances. But the data shows us home values very likely potentially to go up in a recession, and interest rates likely to go down. And if you look at these last 2 slides are, I think, the strongest indications on why we have such a foundationally solid real estate housing industry. Is over 80% of existing mortgages have an interest rate under 5%. That's crazy. You can see that nearly over 60% of them have an interest rate under 4%. Very small percentage of them have anything over 5%, less than 20%. I think that speaks to the lack of foreclosures. That speaks to the lack of inventory as well, right? Because we have these homeowners, hey, myself included, where they've got, 2, 3, 4% interest rates. And there's a number of factors. Number one, my payment's low. So why would I go and, risk it on a higher payment? But my purchase power doesn't really go as far anymore. My home's worth 500,000, that I bought. Well, if I want to go buy a comparable home, maybe I got to pay 6, 750 maybe. So there's a number of reasons why homeowners are kind of staying put if they don't need to move, right? The other factor here, I think, is just the equities. Almost 70% of homeowners have a paid off mortgage or at least 50% equity. That is huge. That's super impactful on the market and shows a very, very strong, healthy real estate foundation. And we're not going to see this run on foreclosures. If anything, we're going to see is a run on sales. Any time that the Fed decides to either start to stabilize the rate, but even if they go so far as to start to, decrease the rate, if we're in, let's say, a recessionary period. Okay, so enough of the data on there. I did want to do something different here. I wanted to kind of show some more data on, it's just actually a kind of a new tool that I'm starting to learn and navigate. But here's Maricopa County. And a few things to kind of point out here. And sorry, let me take one step back. What I want you to get out of this is obviously data and information, and know that these types of reports and this type of information can be customized and run for you, whether it's a specific neighborhood, a property, a zip code, whatever it might be that you're interested in seeing some more detailed information on. So first off, you can see on the scale there, back to my earlier point, we're very much in a seller's market. That very first metric down there under key details, we're at 1.72 months of supply in the county, which Maricopa County encompasses the majority of the greater Phoenix area. And that was down almost 20% month over month. So that's putting a lot of pressure on the market. The list to sold price percentage, so 98.4. So imagine you list your home for $500,000 and you sell it and close for 475. Well, you would be at 95% list to sold price. So 95% of what you listed the home for is what you ended up selling it for. That's slowly ticking up. And you can see in some subsequent slides here that depending on neighborhood or the subdivision or the zip code or the particular area that you might be looking in, that could be even higher than where it's at. Now, normal ranges are between about 98.5 and just over 100, like maybe almost 101%. You can actually see, no, I didn't put that slide in there, but that's where normal ranges will be in a pretty balanced market. The average median days, on the market, 33 in the whole county, that went down over 13% month over month, and prices are going up. So you can see what I'm talking about, where this really kind of unique scenario of low inventory, homes are moving fast, they're getting 98.4% and rising of the list price that they're asking for, and it's pushing median home values up. This is pending listings. Again, also this is in Maricopa County, and you can see right here the median price per square foot for pending listings is and has been slowly creeping up since the beginning of the year. This is the trend that I feel confident we will see for the remainder of 2023 into 2024. Whether or not that spikes one way or another, I think depends on some other variables like recessions and so forth. But generally, I think we're in a scenario where we're not going to see a slowdown in price increase. We're not going to see a slowdown in competition on pricing. If anything, it's going to get, quote unquote, worse. Good news for sellers though, right? Sold listings. So you can see here that 98.37 on sale to list price. So going back a year, we can see beginning of January, we were just slightly over 100, and it dipped, to the bottom right there in December, just under, 97%. And now we've made a slow kind of, rebound there to where we're at just over 98%. And then month supply, I already showed you on a previous slide there, it was 1.7. But I wanted to show you the changes here. So this is a graph. This is expanding over the last 3 years. So this is going back to January of 2020. And we could see, the months of supply was already in distress all the way back pre-COVID. But just last month, we saw a 20% drop. Now over the last 12 months, it's come up 12.5%, which is great. We do need to see that month supply go up a little bit and give us just a little bit more inventory. So here's an example of a specific community that we could look at, and you can see how some of the key details change a little bit. Months of supply is up a little bit more. This is Hastings Farms, which is right here in my backyard in Queen Creek. Wonderful community. We've actually got a link below to a video, overview video of the community if you're interested in learning more about Hastings Farms. And then we've got 99% list to sold percentage. Now that dropped a little bit, so that even dropped over 0.5%. It was almost 100% last month. So homes that are going on the market in this community are being, priced very well. I think there's competition here. I think that there's people looking to try and get into these homes because it's a wonderful community. And we've seen the median days on market is falling pretty substantially, but also the median sale price has come down a little bit too. So, you know, a lot of different variables going on in Hastings Farms. Month supply of inventory, that's, you know, a little bit higher than the county, but as you can see, you know, down 27% month over month and up actually almost 80% year over year. And this is a 2-year snapshot. A few more just kind of like, you know, graphics on demographics. We can show, you know, population densities, median ages, population by age group, AARP livability scores. We can look at, you know, all the data metrics on price per square foot, median sale price, all of the information. So just know that if you have a specific community you're interested in, reach out. You can reach me, phone number, email. Of course, again, stay subscribed, stay alerted, or, you know, set the alerts for the YouTube channel. That's where we do most of our posting. We can get you on our email distribution list if you're not already on it, and just, you know, keep you updated and informed about what's going on. So, folks, thank you. Appreciate your participation, and we'll let you get going. Thanks for watching.